Thanks for having me. Perhaps we might just start with an introduction. I'm the Managing Director of WestStar Industrial, ASX listed company. I'll provide an overview today on the company's business model, which sees WestStar provide a range of industrial manufacturing and fabrication, installation, construction, maintenance services for the energy, resources, water and infrastructure sectors through its two wholly owned subsidiaries, Simpec and All-Type Engineering. Slide, please. So some exciting times for WestStar. The company started out on the ASX in, I suppose, the first full financial year was 2018. And as you can see from the revenue growth that's put on the screen there, we've grown year on year. I think FY21 last year, we got to circa 72 million. FY22 is a very interesting year. You'll see the headline there of $222 million in contracted revenue. We'll attempt today to talk you through some of that revenue and talk you through how it's come about. Slide, please. So some highlights. FY21, as I said, had we'll start with the prior period. $72 million revenue, a 15% increase on the corresponding period. It was contributed strongly by the two subsidiaries. We'll get into the two subsidiaries today that make up WestStar Industrial, but they're known as Simpec and All-Type Engineering. And as you can see, the revenue split between the two was circa 38.69 million for Simpec and $33 million for All-Type Engineering. Delivered an EBITDA of 3.4 million and NPAT of 837K for FY21, which is a big turnaround from the half year results. Contracts awarded during that period was $72 million. Moving to the FY22 period, which we sit in now, the first quarter we delivered record cash receipts of almost $41 million at the end of quarter one. And that's almost a 20% increase on the last quarter. We recorded a cash balance of $15.2 million at the end of quarter one. Again, an increase of 15% on the previous quarter. We carry zero debt, which is very important. Well, let's just say it's next to zero debt. I suppose I'll take you through a focus on the record-breaking $222 million worth of contracted revenue. We call it record-breaking because that's what it is for the company. One of the major contracts which we'll touch on today is Iron Bridge, which is a $145 million award to Simpec, along with some other awards below. Acciona Waste Energy was circa 10 million for Simpec. In recent weeks, an Albania compressor station for $25 million for All-Type Engineering, and as little as last week, a Linus Rare Earths facility of $12 million. So the company's set up for some serious revenue this financial year. We've just completed a capital raise of $3.5 million during the week, successfully completed to sophisticated institutional investors. Slide, please. So we talk about a value proposition because I think when we reflect on WestStar, we look at the revenue, we look at the cash at bank, $222 million revenue, cash at bank, $15.2 million at the end of last quarter. Added to that, a recent raise of $3.5 million. We certainly see the company as being undervalued at the moment. Some of the highlights here, we'll talk you through why we think that. We've got a proven leadership team, which we'll touch on in the presentation today. Strong capability in delivering large contracts. We've demonstrated an increase geographically. We've worked in New South Wales, established a remote office in Brisbane now through All-Type Engineering, and we're growing at a rate of knots. Our reputation with the tier one resource companies we feel is second to none, and we've delivered on many projects in recent times which reinforce that. We've announced some incredible contracts in recent months, and our tender book looks strong, and so the opportunity is there, and we're well positioned for growth. Next slide, please. A brief overview of the group. So WestStar being the parent company, and underneath that sits Simpec and All-Type Engineering. Simpec has been with the group for 4 financial years now. It was an acquisition that was done early days. It's grown year on year. It's led by an incredibly strong management team, which we'll touch on during the slides, but predominantly they have the capability of and delivery of structural, mechanical, piping and E&I work. All-Type Engineering is a recent acquisition. Some 18 months ago, we undertook 30-year history, significant presence in the market from a fabrication perspective, and a successful acquisition for WestStar, delivering profitability as we've been moving forward. As you'll see on the left there, they're the subsidiaries and their spaces that they operate in: engineering, construction and maintenance services, fabrication and construction, in the civil, structural, mechanical and piping and E&I spaces. Please, slide please. So this slide to me is a very important slide. I think it tells a little bit about our history and where we've come from. You know, for this type of business, it's all about building reputation. The jobs just don't land because you're the cheapest price or, you know, your tender's the best tender. You've got to build reputation for delivering work. Our teams in both Simpec and All-Type are led by two very strong managing directors who have a history and experience in delivering very large-scale projects. It is because of them that the projects that we are being awarded now, and it's because of that delivery of their teams, is the type of caliber of projects that we're being provided now, and hence the revenue growth. It comes with bigger projects as you're successful in delivering historical projects. The successful acquisition of All-Type was very strong for the company. It enabled us to grow our order book. And, you know, the strategic plan that we've set out to achieve a few years back is certainly probably moving at a rate of knots, as I say, and it's probably ahead of the target. The step change in growth was a highlight for us to increase the contract and order book size. And obviously, you know, with that comes the growth in revenue and EBITDA. Next slide, please. As I touched on earlier, strong management team. The two MDs are highlighted there, which run the two subsidiaries. Very strong history in delivering, as you can see. I won't go into each project, but if you look at the size of the projects, what's important about WestStar and the group, and particularly Simpec and All-Type, is whilst the company has been in operation for some 4 financial years, the history of these individuals and their teams in delivering large-scale projects is a 30-plus year history. So effectively, our philosophy is pulling together excellent managers of businesses and excellent teams to be able to deliver strong projects. The public company up the top there has a CFO and an MD, which is myself, and we like to keep that overhead low, and we provide a governance function to the subsidiaries. Next slide, please. Some of the clients, as you can see, I think the names speak for themselves. We've delivered all of, for all of these clients, successful projects, and we continue to do repeat work for all the clients. And I think that's a testimony to the quality of work that we've been producing. Next slide, please. So just a quick snapshot of some of the projects that we have worked on in recent times. For Simpec, I won't go into the projects in detail, but as you can see, they are significant projects. They do demonstrate capability and experience. And some of the more recent ones, the Lynas Rare Earths rotary kiln project that's been awarded to All-Type, and the APA Group compressor station that's been awarded as well. They're two new projects that have just arrived. Next slide, please. So we're going to focus as quickly as we can on Simpec. Simpec's an acronym for those spaces that it operates in. Next slide. What I want to focus on today, as quickly as we can, is the FMG Iron Bridge project, $145 million award, construction of the wet process plant, significant award for the group. For us, it's about people, it's about capability. We'll talk as quickly as we can through the project itself, but circa 500 personnel required for the project. Recent award, tracking along well. Job has commenced. Literally swinging hammers at the moment on site. Next slide, please. So the scope of works is a major module installation, tank installation, mechanical installation, et cetera, as seen on the slide. $145 million contract, 12 to 13 month program. It's a significant step and testimony to Simpec's ability to deliver projects. I touched earlier on the fact that projects of this nature just don't land in your lap because you've got the right price. It's all about teams. It's all about organisational chart. And we put together, through the managing director, put together a wonderful team to pitch for this project. And there is certainly years of experience in delivering similar projects of this nature. Next slide, please. So we do look at the key risks that are on the project. Procurement is one of the areas. There's a lot of free issued materials on this project. So unlike traditional projects, the procurement risk is taken out of it. We certainly touched on today about the personnel and the capability that we have and the people. A lot of people sort of ask, how do you migrate, 500 people to a project like this? Do you have the ability to do it? I mean, to give perspective, Simpec in its own right has had probably circa 320 people across its sites on different projects nearing completion. So there's a migration element along with new people being recruited to the project. What we can say very confidently today is that all people required for the project are on site. We certainly are very happy with the take-up because it's, I suppose, a 12, 13 month project. There's a lot of interest in people wanting to work on the project. The pay rates are strong and it will deliver the right type of people. So we're very confident that we have the people to deliver this project. And I suppose from a financing perspective and a cash flow perspective, we touch on there the ability to be cash flow neutral and our ability to fund the project through bonding. Next slide, please. Again, some of the compelling reasons which I've touched on today: key people, our joint venture with Iron Merge, which is an Aboriginal engagement. These are key reasons for being awarded these types of projects. Health and safety record is impeccable, and again, a key reason. Next slide, please. We could probably move through that one, but this is all types of engineering's background and type of projects it's worked on. Next slide. Yeah. So, I mean, to summarise, we're a highly focused group, highly focused in building the pipeline of major projects. We've got a strong track record of delivery, a strong track record of delivering projects on time and on budget, and a highly experienced management team. Next slide, please. We could probably move through that one as well because we've just sort of touched on, I suppose, board and management. And look, I suppose the summary to this is, and I'm getting the twig that my time's running out, but we're in a very favourable and unique position. Record revenues for FY22, sustained earnings, I suppose, over FY23 will demonstrate a greater period of revenue in what's known as the company's history. And tendering of proposals across the group remains very strong. So we're in this maturity phase of growth, and we're there to deliver long-term sustainable earnings for the group, and that's our focus. Our focus is profitability, and we will deliver these projects and we'll deliver them profitably. And I think that the market will recognise that, and our value proposition will increase. Thanks for the presentation.
Thanks, Rob. Couple of questions here, quite a few actually. There's a lot of talk about inflation in kind of the chain, the distribution chain. Is it becoming difficult to price jobs based on kind of cost price inflation?
Yeah, look, it depends. It depends on the type of projects, but I think that, the way that our types of businesses operate is that we commit time to dollars. So effectively, at the end of the day, prior to signing contracts, you're committing to your suppliers and your subcontractors, and they're committing to you contractually on price. So that's how you mitigate your risk. And if there's any pass-ons that need to occur due to those fluctuations, well, contractually, you've got to cover yourself for those. So that's what we try to do.
And you recently raised a little bit of capital, but you got a healthy cash balance. Why did you do that?
Look, I think we've always tried to be a step ahead of the game. Our cash balance has always been strong. We manage cash very well. As I said earlier, virtually zero debt. The capital raising came about because there's a lot more tendering going on for the group, and we foresee the possibility for working capital and bonding moving forward. It's a function of this industry that we're in. So we don't want to impact our current projects from a cash flow perspective. So by raising, what I would call a small amount, I mean, we could have raised a hell of a lot more. There was a massive take up for it, but it's enough for us to look at these potential projects that that we're tendering and coming on from a working capital perspective and a bonding perspective, so that we can keep growing revenue. Yeah.
And in regards to growing revenue, which would probably mean winning more work, more contracts, what do you need to put in place? Is that more money, or is it more people? Combination of two?
I suppose every contract's sort of intrinsic to itself. So you set up teams on each contract. So for the current contracts, those teams are established and they don't impact on one another. The interesting thing about the model is you've got Simpec and Alltype, but I think that that Alltype and Simpec set up teams specific to the project. So we are in a position to be able to take on more work. There's no doubt. And it's by successfully putting teams together that enable you to do that. And you're not pulling on the same set of resources, if that answers your question.
Yeah. And do you think the market's kind of watching to see how you deliver on these big projects in terms of time and profitability?
Absolutely. And we're very aware of that. I mean, whilst there's an element of undervalue, we feel, I mean, I think we got a market cap today of 24 or 5 million. We got $15 million cash in the bank. We just raised 3.5. So we're not far from being cash back. We're profitable. We've been profitable over the last 2 years. So the market's looking at us and saying, well, a big project here with Simpec, hence the highlight today. Can they deliver? We try to touch on very briefly today around our mitigation of those risks. We are very positive in our ability to deliver that project. That project, as of today, is running exceptionally well on time. It's a project that will be a feather in our cap. And upon completion of that project, we will re-rate. It's only natural that will occur. And I think that our types of businesses are a function of profitability. So let's deliver the profit. And I think the market cap, so to speak, and the share price will absolutely take care of itself.
And there's some smart questions here in regards to margins. Now, I'm not sure whether you can talk about this. Margins attributed to the contracted $222 million worth of revenue, whether you can give any more color on that. And what are the gross margins of the contracted revenue?
That is, I think the answer is obvious there. I mean, we get asked that question, but the answer is we can't answer that question. I mean, that's our competitive advantage, and that's it in a nutshell. Yeah. Give that away, and I suppose you give away your operational advantages. So unfortunately, we can't talk to that. But what we can say is that all of the projects we're working on at the moment, and if you look back on our history to try and answer the question around margin, you will see the history of I suppose, EBITDA margins across the financial years. And again, this year you'll see another history of that. I talked earlier about how we keep the parent model low in overhead, so it gives these subsidiaries the ability to deliver the biggest return possible on their projects.
And two more questions. And I think this is a COVID-related question, but how did the labour shortage in WA affect your operations and margin?
Yeah, look, it's an interesting one. There's been a lot of talk about it from, I suppose, a lot more of the tier one companies and the impact that it may have. To be honest, we haven't seen a massive impact. I think a lot of our labour is local. I talked earlier about people and about teams, and I need to reinforce this, that the companies and I suppose the culture that's been developed in these companies, they're big enough to take on big projects. They're small enough to still be personal. And I think at the end of the day, the type of personnel that it's attracted has been traditionally and still today local labour. And we've been very good at doing that and been very good at delivering that. So it didn't really have a massive impact on us. Yes, it had an impact, but not a big impact. And it's not having an impact on our current projects. Our current projects, from a manpower perspective, we are ahead of the curve. Yeah.
And finally, and I'm not sure how many shares are on issue, but there's a question in relation to a share consolidation. Is that on the horizon?
No, there's no consolidation on the horizon at the moment. You asked a question about how many shares on issue. Well, we just issued another 150 million, so circa 1.2 billion shares on issue. I think our focus, to summarise at the moment, is I touched on us raising the cash. I touched on how much cash we've got. if you look at the revenue numbers and you look at the projections around what we have under contract, you're going to see that the revenue is going to increase significantly over the next 2 to 3 financial periods. So, you know, with that comes profitability. That's our focus. No, there is no other focus at this point in time around that. And it's about delivering these projects. That's our pure focus at the moment.